Good morning all, this is Chris from Elite Currency with a new update on the euro dollar and pound dollar. Before we dive into the euro dollar, I wanted to ask you a favor. If you like the videos that we produce here on YouTube through our ECS channel, please leave a review on forexpeacearmy.com here about us, elitecurrency.com. We would definitely appreciate it and help build our community. So if you could do that today, that would be great. Thanks so much. Alright, so here we have it, the euro dollar daily chart, and we did get the break to the downside. I was still leaning and favoring the bullish reversal after the double bottom, but no, prices broke through it and kind of invalidated that bullish scenario for the moment at least. There's still a back chance that price might make an upside, but for the moment, with such a bearish candle yesterday printed, close clearly below the 113, close near the low, a dominant, strong, large candle. So I think a continuation for the moment is indeed the path of least resistance and is the most likely. So from my perspective, looking for a small pullback here and a continuation makes sense. I do think that any push to the 21 EMA will see a bounce and continuation, but I'm not even sure that price will get up to the 21 EMA. There could be an immediate continuation right now, looking at the hourly chart, for instance, right? So price is making a little bit of a flag, and it's getting into London Open at the moment. So I wouldn't be surprised if there could be a continuation right now for a lower low. The alternative is that price does make a little bit of an expanded flag first, like this, and hits the S1 maybe a little bit at around 112.75-ish, hits this top. But I wouldn't expect, to be honest, at this moment, not much deeper retracement at this point. I don't think it will retrace that deep before we kind of build a wave 4 flag pattern here and break for one more lower low at the very minimum. And that price could go up down to the S2, for instance, here at around 112. All right, so it could bounce from 112.70 down to 112, maybe break below that, but that's kind of the minimum target I have in mind for the moment. Now eventually, let's say it does this for the moment, up, down, and here we could get maybe a bigger consolidation. The 21 EMA zone can dive in and then hit the 20 and hit price, I should say, or price hits the 21 EMA. That could then be a resistance zone for a continuation down to 110. So I think that eventually price will retrace back to the 21 EMA, use it as a resistance spot for more downside. Something like this here. We pulled away from the 21 EMA, went back into it, and continued lower. So these moving averages that you see on the chart here are not only for analytical purposes, right, what we use for SWAT, our methodology and course, explain how we use the moving averages and the oscillators, and we have an entire system of methodology behind SWAT, explaining the market structure. But we also have rules-based systems that are based on these methods, these indicators. And in this case, when I use rules-based systems, I just follow the steps and I don't analyze. I just follow the sequence of events or indicator things I need to see in terms of moving averages, fibs, and fractals, and then we also use other tools like Wiz, for instance, to find the best setups. Those are all rules-based strategies. So what you see now is my analysis, but we also use rules-based strategies. All right. So I just wanted to clarify that, and you can see that for the moment, price is moving away, as we explained in our course, from the 21 EMA. So I think that that could still continue for a while, maybe to 112, maybe even further, maybe to 111. But eventually we should see some kind of bigger flag on the 4-hour chart that hits the 21 EMA zone and then continues further down. Definitely yesterday's daily candle is a strong signal, and I think that today could be a little bit of retracement, but eventually we should see a continuation to the downside just based on this price action and a break of 113 and 112.50. And I think if, for those that are interested in wave patterns, this is starting to look just like a simple ABC. And I think that this could be wave 1, 2, wave 1, 2 of a different degree. This is of a higher degree. This is of a lower degree. Let's use orange like this. And this could basically be start of a wave 3. So that could be pretty impulsive. The alternative is, because, it's not a guarantee, it has to be a wave 3. If it still stays above 111, it could still be part of a correction. This could be a W. This could be an X. And up it goes for Y. That doesn't seem that likely at this moment, considering the break, but it's still a possibility we have to keep in mind. So 111 could also be an important target zone from that perspective. All right, pound dollar is continuing, hit the S2, hit the 78.6 fib. I think the pound will have a little bit of a struggle at this spot. It might make a little bit of a lower low, but ultimately it's getting into a zone where we could expect a turn and a little bit of a bounce. Pretty strong support. Deep fibs are typically strong support. So I think that there could be a bigger ABC correction off of that level. And or we could see it immediately. If you look at the hourly chart here, you can already see a move up and a kind of a weaker move down. So if we get a break above the S1, we could see a wave C more or less right away. All right, and in that case, let's take away this fib and let's put the fib from here to here. And if we do get a break above the S1, I think we could see a push up like this, ABC, perhaps to the 50 fib and back to the long-term moving average, maybe the 61.8 fib and the weekly pivot point. Those are spots of confluence where we can see price move down again, I think, to re-challenge the previous bottom in here. I don't think that bottom will break because ultimately, if you look at the daily chart, let's go here. It looks more like a triangle to me. We have an ABC pattern here. We have an ABC pattern here. And I think that we're going to see a continuation of that. This could be A, this could be B, this could be C. I think that this could be D. Up we go for E, and there's a bigger triangle taking place on the daily chart of the pound. So from this perspective, I'm expecting a move up, either here or a little bit lower, then a move down, but not break this bottom, then a move up to finish wave V, and then I expect to break out to the downside. That will finish wave 4, and I expect a bearish wave 5. That's my main view on the pound dollar for the moment. So up, and then a big down. And that wave 5 could really take price to the previous bottom here, which is around 120. That's a lot of pips to the downside. And we're talking here, we're at 128, 129 at the moment. So, 800-900 pip space potential there for that downtrend. All right, thanks for watching. And if you like these videos, once again, we would definitely appreciate your review on Forex Peace Army, about us, elitecurrency.com. Right here, you can see it. And here you have the link. I'll add the link down below. Thanks so much. Cheers.